Hi, this is Randy Finney with the right side of the chart, and this is a late session update for Thursday, March 24th, 2022. I'll keep it quick. I just want to update this trade idea. I'm going to start out here. I usually start out with the broad markets. We'll get to that real quick. There's some things I want to show you in the 60-minute charts, particularly regarding the market-leading FAANG stocks. But this RKDA trade is about to hit the second target or close enough. I mean, effectively, you could take profits here. I've got a sell limit order a few pennies above. I'll probably be hit by the time this video is over. Hopefully, that's at 236. Now remember, the second target is really a zone. I always sell below resistance. 238 to 245 is my zone. So I've got a sell limit order at 236. We already hit a high of 234. So give me two more pennies, otherwise I will ratchet up my stops if fails to hit it today, but I think I should be out of this one, hopefully. So that's good for about a quick 50-60% return if it's hit, or even right now we're about 58 or so off where we started to take volume after the back test right there when it was first highlighted as a trade idea over here about a week or two ago. So that's let's talk the Qs real quick. Then I want to do an update on lumber and crude oil. All right, QQQ. We're going to zoom down to the 60-minute chart. You guys know my long-term thoughts. I've made that very clear over and over lately. If you're new to the site, just go pick up on any of the recent videos. Easiest way to do that, let me show you real quick. Okay, a couple ways when you're in the site. You can go right here and click on a market analysis right there. Do the drop down, all asset classes, equity market analysis. You click on that, it's going to load all posts with equity market analysis. If you're particular on a certain index, you can click, for example, these are symbol tags down here below each and every post. They're hyperlinks. And SPY, for example, if you're a SPY trader, QQQ, if you're a Nasdaq 100 trader, I'll also put in the futures or the index itself, NDX is Nasdaq 100. You click that, it's going to call up all posts that contain analysis on that. And of course, you can go if you anything you want to find, just go to resources here, right side of the chart, support center. Down here, use this symbol tag box. Just type in, let's say QQQ. I didn't do that quick enough. Let's try it again. QQQ. For some reason, it's giving me a hard time. There it is right there, and you click that, and it's going to load all posts in chronological order, or reverse chronological order, technically speaking, for the most recent, and you can look at it that way. All right, back to, let's talk about the Qs right now. Some things I want to show you. So the other day I mentioned, after as far as, again, I wear multiple hats. I've talked on that. I went long here as an active trader, gained a good part of that bounce. Wish I would have stayed long through the whole thing, but didn't. But I was in and out a couple times, and a lot of actual day trades in here as well. But as far as swinging it up, we went on then to break above the downtrend line right there, gave us a major buy signal, and had a minor uptrend line right here. We broke that, had a correction, and at the time I was targeting, and still am, this level here, minimum about 341.50. But at the time I said, look, it's certainly possible. Usually, quite often, and I really like to see the divergent highs on the 60-minute chart. We didn't have that then. We were, as mentioned, overbought right here on the RSI. Well, that was right here, and I said, if you push up, what's common is you push up, you make a lower low on the RSI, and you get the negative divergence, and that's what we had the other day. So, as I mentioned, we had what I believe to be an objective short at 352, and then again at 356.81. We're still there. Hey, we could certainly break out. If we do, it just shows a powerful appetite right now. I mean, near term, I talk on near term, intermediate, and long term trends. Long term trend remains bullish. The intermediate term trend has been bearish, but it's a little bit questionable. I talk about that. I talk about trends. You had a clean definition of a downtrend, or technically speaking, securities making lower highs and lower lows. And then what happened recently, we took out these previous reaction highs right here, or that one right there. But we've tested this one. So, that doesn't all of a sudden say, oh, well, the intermediate term trend is now no longer bearish, but it does call it into question. It's not ideally what you want to see in a downtrend, but sometimes they're not clean, with a clean series of higher highs and higher lows. In other words, you don't always get a clean downward sloping price channel or an upward sloping price channel or sideways. Bigger picture, that's you zoom out to the weekly chart and not a whole lot's changed. But near term, that's what we need to know as active traders. We're still at and have been for the last few days since mentioned back here as an objective short. And that gave us the divergent high. The divergence so far is playing out in the form of a we have a correction, but I always say stocks can correct in one of two ways, either in price or time, or a combination of both. So that's really three ways, but just keep it simple. That's a price correction. You do this. This is a time correction. You correct sideways. That's actually the more bullish of the two, and so far that's what we've done. However, as I also like to say, resistance is resistance until unless taken out. That divergence that we had right here on the 60-minute time frame has been extended because you now have the prices making equal highs from that point. And after making higher highs, and the divergent indicator still making lower highs. So that's it. I'm not crazy about this from the short. I'm still sticking with it for now, but I'm also diversified. I've got other things. I'm going to go over some of those in this video. But I have this 0.53 level that has done a good job of giving you sell signals when you cross it, but that was also when we were in a downtrend. See, so every time we got here, we had nice sell signals, 1, 2, 3, 4, and so far this one's not panning out. It looks like PPO is wanting to turn back up there. So all I can tell you, if it pops, I don't have another resistance level. I don't see anything really decent. I have minor resistance, but I'm not even going to bother adding that there. It's about in the midpoint there, all the way up to about 369.50. Do I think we get there? Hey, anything's possible. Like I said, there's a good chance we're going to run at, well, we already made a run at, I'm sorry, the 200 days. I talked about that before. We've been hitting and trading off of that same resistance level, which I showed you just a second ago on the 60-minute chart as price resistance, is also the key 200-day exponential moving average. So there's 3 days there that that 200-day EMA has capped the advance. Right here, it capped it, popped it for 2 days right there, but the second day it had a failed breakout attempt. It even popped the 200 simple for a day. It just shows when volatility is high and prices are swinging up and down 2-3% a day, you're going to trade. It's not unusual to trade through or above a resistance level shortly, especially on the daily time frame. But you can see ultimately that 200-day, other than one brief little whipsaw, one day that we went outside it, closed outside it, the 200 simple 1, 2, 3, 4 days capped the advance, and then the downtrend resumed. So we broke the 200s, both of them right there in one fell swoop on that candle. The 200 simple up top and the exponential. Back test rejection, and a low. Now we're back testing again. Some traders look at this one, and I say this often. The reason I have them both on my chart is because I can't say I like one better than the other. I tend to lean towards usually tech-heavy stocks, or tech stocks, or tech-heavy indexes like the Nasdaq 100. The 200 exponential usually is the one that will cap the advances and also acts as support during bull trends when you get pullbacks to it. I'd have to zoom out here, but you can trust me on that. I've showed it many times. And that's it. So we pop that one. Then the next set of eyes, the next set of traders, will look at the 200 simple, as well as price resistance, which you're going to have there as well in that area. And you'll probably have another key Fibonacci level. We're just above the 38.2% retracement right now of the entire move down off the November high. If you put up your fibs, they're right about there for the 38.2% retracement. So that's that. Now, here's what I wanted to show you. Okay, so nothing's changed. And ideally, and I think it'll happen, but I'm going to show you what we need to have a break of that level and a pullback to hit that minimum near-term swing target I have of 341.50 right there, this line. And that is going to be this. You got to break the leaders. Apple. big dog, strongest one of the lot during this whole correction. It's the only one out there, the big market leading FAANGs, that never lost, or at least not anything more than on a daily basis, a single day. It held it on a weekly basis, held big support. This is Apple on the weekly. Here's a price channel I've had it in for a long time, and I also had the 200-day moving averages on the weekly chart. They're the 40-week moving averages, same thing as a 200-day. When you're looking at a weekly chart, same price levels, and it hit those perfectly, and didn't even give it up on a weekly basis. Had an intra-week break, closed right above it, and so again, this is the best of breed in the Nasdaq 100. It's also the top component. However, so what do we need right now to get some selling going on the downside? This is a 60-minute chart of Apple, and we have a beautiful price channel right here. Very well defined, and that's just walking up that channel, walking up the channel. This is what I call an ADH, almost divergent high. You have a slightly higher, almost for all intents and purposes, you have about an equal high in the RSI, but you don't have the divergence yet on the PPO. It would be nice if you did. And again, big market leading stock, but not the only one in the index. Sometimes Apple can hold up, and if the majority go down, as we just saw during the big correction that we had, the index will go down. That next level I had on QQQ, which is certainly possible to be hit soon, will coincide roughly with this. This is a big level. And what I'm going to do is, when I said the other day that I was adding back in, it wasn't tactical. The day trades, I usually don't even mention that to you. Once in a while I'll show them on the 5-minute chart. I'm talking swing trading. I'm reloading back in into those swing shorts. I told you a couple of weeks ago, or a week or two ago, I pivoted, meaning pivoted off that stance where I was going to sit tight on all the index shorts because of the bullish falling wedges. Did that before they even broke out, and then afterwards, and but then I started adding back. And so what I'm getting at is that next upside level on QQQ, I'll allow that. Nothing much more than that I don't want to see. That's going to coincide roughly with a move up here to about that 177-ish level on Apple. It's right here. It says 177.21. I could pull a line down to here. I'm just going to leave it there. Pretty good resistance. And again, we are at resistance now, so it doesn't mean we're guaranteed to go here, but right now, Apple and the market seems to be burning through those divergences. Last time we had a divergent high was right there, and this happened. Boom, 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 boom. Time before that was right here. We had negative divergence at this high, and that happened. So we don't have the divergence yet. Here's where I'm going. We could break down from this channel, or we can work our way up in there. So I'll be looking for divergence if we do, and that will be where I'll add a third and final lot to a swing short position in the Nasdaq 100. Near term, however, if we don't get up there, look for a break of this trend line, because the trend line is also the bottom of the channel. It's pretty well defined, and that's probably going to bring Apple back to minimum 167.90 right there would be my minimum pullback target for Apple. And of course, Apple is even though it's the top weighted component in the Nasdaq 100 as well as the S&P 500, it's not the only one, so I'm going to be watching Microsoft as well. Microsoft, I don't have the same kind of channel. I do have an okay uptrend line. It doesn't have as many reactions, but I also have the stock at pretty good resistance. If it can pop that resistance, if the market's going higher, the next stop is up here, roughly around this level. I'm going to put it about call it about 312. However, we did break this minor uptrend line, and that could do the trick. We also failed so far at that 303 resistance, and pull back. Let me turn this line back on. That would I'd say Microsoft might come back into about that 290-ish support plus that secondary uptrend line, like that right here, somewhere in there. So this one's broken down, also rejected off resistance, but Apple has not yet broken down. I suspect it will. I'm favoring that, but like I said, unless support's broken, that's what I always say, support is support until unless broken. So there's another one. Okay, so now we have Apple and Alphabet. This is the class A shares, GOOGL. Very nice 60-minute uptrend line. You could also make that a price channel if you want. Just create a parallel line, put it on there. So just like Apple, you have these two big dogs in a nice clean uptrend line that could crack any minute now. So if you set price alerts, the way this works, if you're trading, let's say you trade the Qs or NQ like I do, Boom, if you get a price alert on Apple and then a price alert triggering on Alphabet, um, then you know you have a pretty good chance that the Qs are going to drop at that point if both of these are broken down. Even better if it's not an intra-period whipsaw, if you get a 60-minute close. Now you do have some minor support below. That's at 27.55. That's what I call the BOD, benefit of the doubt level, because we could break the trend line and then push on up and do that kind of thing and then put in a bigger divergent high. But I do want to mention there is already negative divergence also in Alphabet there. So be on alert for the breakdowns, and if we don't break down now, or even if we do, watch these trend lines. It's one of two things. You don't break down, we'll probably just work our way up here. Then you hit the next resistance, then look for the breakdown. If you do break down in the first minor support, or it's decent support holds, maybe you get a back test of the trend line and then a rejection. That would be, in order of what I think will happen, I would put almost equal odds of this, boom, boom, back test, extend the divergence, but it's marginal, or we just break down and go on down through there. Those are my two most preferred options. So either way, I don't see a much more upside before we get a decent correction. And then last but not least, no, one more after this, Tesla. I like to include Tesla now in the top 5. Amazon, nice clean uptrend line. This is a 60-minute chart as well. That's what we're going over here. And also, so everyone but Apple, and Apple had that divergence on the RSI, not the PPO, but the rest of them have negative divergence already on the both indicators right there. It's small divergence. And again, that divergence can certainly and would certainly extend if we get one more thrust up. It'll look like this if it happens soon enough. These indicators are lagging to the point that if we had another thrust up pretty strong in price to the next resistance levels that are not far overhead. They're really, on this one, Amazon, it's about, 3 to 4%, somewhere in there. And that would also be a divergent high. So from a longer term, a swing trading perspective, where you could see more than just that minimum pullback target, that's to me, it's not that much. Again, you keep it small. That's why I like layering in. There's no hard sell signals on the market at this point in time. All there is in fact, there's really no sell signals. There's just a rally into resistance with divergence. I always say there's two ways that I will short a stock or an index. Number one, in a downtrend, or anytime a rally into resistance, even if it's an uptrend. If it's a resistance level I expect a reversal on, and I can, and confirm it with other things, then I'll short there. That's objective. And the other way is when you have let's say a bearish rising wedge, a chart pattern, and you wait for a breakdown, then a break of support, boom, right there. That is also an objective entry. So one of them is a sell signal. That's a sell signal, and this is a push into resistance, but both offer an objective shorts, because if you go through the resistance, if I'm wrong, well, guess what? It's easy. You have a stop on the other side of it. And sometimes you scale in, and then you're scaling in. If you say I'm going to start shorting here, I'll add if it gets here, and then I'll add if it gets there. Then your stop is above there. Again, all depends on what's going on with the charts, what your average cost basis is, and a myriad of other factors. And last but not least, Tesla. Again, see, here's a common theme. These are clean trend lines. These are well watched. And as I've said, technical analysis shines in periods of high volatility. Traders flock to that because the fundamental landscape is shifting so rapidly. It's hard for those that use fundamental analysis to get their head around everything, or call it what you want. But the traders come out to play. The algos, which are computerized trading programs, they come out to play, and these things, that's how it works. So if one breaks, you're likely to see the next break, and if 2 or 3 break, then you're likely to see a move down there. And if not, if they break and they all ramp right back up, then all I can say is there's still a very strong bid under the market right now. And this is nothing but, I'm still viewing as most likely a bear market rally. But again, as I've covered quite a bit recently, you can't call this a bear market yet. There's just not enough evidence. It didn't take out some of my long-term key levels, like the 40-week I'm sorry, the 20 period moving average on the monthly chart, some key uptrend lines. I just showed you one on Apple. So we had a lot of things break down, but not enough of the big stuff, and not enough of the sectors in the S&P 500. All right, I'm going to leave it at that. That's your update on the market and the big FAANG stocks and what to look for there and how to trade it if you so choose. And if you don't, nothing wrong with standing aside right now. Update now. Let me do lumber. Lumber, I still have an additional downside target or targets. I said it may come all the way down here to that 825 level right there. I'm going to just tell you, and it shouldn't matter. Usually I don't try not to, what I'm doing shouldn't affect what you're doing. I closed out this lumber short here. We hit my 1022 target today, which was the 1, 2, 3, 4th target. Remember, we shorted it here. It was first laid out as a trade setup. That is a trade not yet pending a sell signal. And we were in this bearish rising wedge, just like we had this bearish rising wedge back here, and that led to that drop, which measured from the breakdown point. That was good for a 30% drop, and that ended with what I like to see on the 60-minute time frame, positive, aka bullish divergence, set up the next uptrend, and that ended with that bearish rising wedge, and that was our sell signal. So right now, boom, 1022. I'll continue to update this. I just wanted to let you know that call it whatever. I revised my trading plan and have just closed out my full position here today, and so that's good for. I'm trying to measure it for you and tell you what we got on that. About 21% from the short entry there. Why? Well, one of the things we still have, it's hanging on by the skin of its teeth, but potential divergence on the PPO. That means what would have to happen, we'd have to reverse here off that support level soon. Otherwise, if we go much lower, just like we've now done on the RSI, we would take out the divergence. Now, if we turn up quick, these lines can actually move a little because they're intraday. They'll change, and we have almost divergence there. So that, coupled with the relentless bid so far in the stock market, if the Nasdaq 100 as well as the S&P 500, if they fail to correct now from these divergences off these resistance levels, off these what so far are typical retracement levels. Again, let me just loop back to that. I know I'm kind of sometimes do that, go all over the place. I kept talking about the retracements. So QQQ, turn off all the lines. Turn off. No, I'll leave the lines on. It's messy here, but what I have, because if I turn them off, the fibs go off. Here, let me see if I can do something here. Let me find a clean board for you. And there it is. This one will work. Okay, so this yellow line right here, and I have to adjust it, and it wasn't set properly to that recent low. This one needs to come down a little, and this one needs to come down. These are fib clusters. This was your ATH, your all-time high right there in QQQ, November. We had our first sell signal right there when that broke down right off the highs, and we had additional sell signals and bounce backs to resistance that gave us multiple short entries here. So we're still, if you took those, which is still what I consider on the larger swing trade, still an active trade, you're still very, very profitable on that short. And if you heeded the divergences and the warnings recently and maybe pivoted a little bit like I did and covered some, then not bad. Then you didn't give back as much on this bounce. But so far this bounce is a little bit north, just a hair north of a bunch of those fib clusters. You can see them all here. It's the 38.2% retracement, Fibonacci retracement off the all-time high right here. It is the 50% retracement off this major high right there, and I could even move that one up and put it to right that point and see that would be the 50 just above there. It moves it right there. So anyways, you have a fib cluster. Now, it's not ideal that we're a little bit above that, but relatively speaking, we're not far. We're a little under. We came off the highs a little bit. We only overshot it by about 0.75%. So I just wanted to say that. And where am I going with this? Well, okay. I always say that a typical retracement. This is not a hard set in stone formula, but a typical counter trend retrace bounce from a much larger move move. In other words, assuming I'm correct and my swing targets, my next targets. We already hit all my first targets on QQQ, SPY, and IWM on the weekly time frames. But assuming those deeper targets that I have down here, T2 around 299 to 300, then T3 and T4, assuming these are going to be hit, this move, this counter trend rally that we've had so far, is just a typical run-of-the-mill. In fact, it's about a minimum, because I usually it's at 38.2 up to about the 61.8 are typical counter trend moves. Whether you're in a bull trend and you have a correction, it's going to retrace, 38 to 61.8, again, roughly of the previous move up, and then continue on. And in a downtrend, assuming that, just is a big assumption because the primary trend indicators have not all rolled over. If we're down here later on, we'll know we're in a bear market, and then we can say with more confidence they're counter trend moves. But right now, I'm still going off that working theory based on everything I've covered a long time, that this move here, which again has only hit that 38.2, is a run-of-the-mill counter trend rally in a much larger move with more downside to come. And if it goes up to the 50, that's still very much within the realm of a typical counter trend bounce within a larger trend, even the 61.8. Oh, just got an alert. That RKDA sell order just got fired off. So that one, consider that one closed out now. All right, next up, I wanted to show you, well, I was talking about lumber. I kind of got off that. Anyway, what you can do is set a trailing stop. The only thing I don't like about it, and one reason I took profits, this one doesn't, unlike Nasdaq 100 or S&P 500 futures or just about anything else, gold, silver, these guys don't trade around the clock. And so it's gappy. So if it bounces off this support, it could bounce up tomorrow and be up 5%. I just take the money and run right now. That's my thought process. If you want to hold out, it still very well may get down to these additional targets. You can set your stops and let it run. And if you're new to the site, I've said this many times, there are, to the best of my knowledge, there is not an ETF or an ETN that directly tracks lumber prices. The closest thing you have, it would be Wood or Cut. Those are two ETFs that hold forestry and lumber stocks. The companies that, like International Paper, those that are cutting down trees and turn into lumber and paper products and things like that. So it's not a direct play, it's an indirect play, but because they tend to track lumber prices over time, like these are random late lumber futures. Okay, and then speaking of futures, here's crude oil. I got this one out to you this morning. We had, it's not really doing much. Crude's been resilient. We know what's going on. I don't have to tell you fundamentally what's going on with crude oil. Everyone knows what's going on with Russia and Ukraine. And there's your, this one's based off technicals. You have a divergent high right here, a negative divergence. And we're at right off resistance about 116 or so right there, 115.77. We'll call it 116 ish. And we took out the trend line, and that's it. The sell signal's in play. I told you you'd have to take out the 112.50 level. We took it out, but not by much, briefly, and we're back testing. So again, keep stops tight. I think I mentioned this morning I'd keep a stop just over that 115.80-ish level right there. There's a lot of reaction highs there. If they pop that, they're also going to have taken back the trend line. Otherwise, I think this one goes down to right there. I give you a minimum target of 107, and it either works or it doesn't. And then the thing too with crude, it's been trading like natural gas lately, which means when it runs, it's unidirectional, and then when it reverses, boom, the trend's powerful. Lumber does that too. And so you can have what I call a runner trade. Instead of taking profits at 107, you'll probably get a reaction if we get there, and it could be the final reaction, or maybe you continue on down. So what you do is you lower stops to protect profits and just let it run. And these are your next targets if we get there: 104, 101.90, and then 98. Those would be additional downside targets if you're in this one. Figured I'd do a quick update on gold. It's been a while, but I continue even when I don't cover the charts. I tell you, my outlook hasn't changed. It's just been consolidating lately. Remember, gold finally started catching what most people had written it off for a long time. It started catching a risk-off bid. People in the recent years were saying gold is dead, Bitcoin's the new gold for a risk-off, a replacement of the dollar, but that didn't happen. And again, argue what you want fundamentally. I'll be right, you'll be wrong. We all have our own opinions, but technically, this is what I've been watching highlighted for a long time. A break above the triangle pattern I just drew there, and as well as that 170, about 174 level, both taken out and ran up. And I mentioned here, even turn around and shorting gold briefly because it hit that all-time, that previous high right there from back in mid 2020, and that's a big high, a major reaction high. So you're not just going to blast through and keep going. Even if you had overshot it a little, we would have most likely come back down. So that's it. I just viewed it as a typical consolidation. It was overbought. We had the first time we hit overbought on the weekly chart since all the way back here in mid 2020. That was it. So what do it's not going to rocket up much more. Now it can. We've already consolidated. So this is why I'm doing an update. We've had plenty of consolidation, and I think if I am right and the market, the upside is limited, and it doesn't even have to be, but it'll help. If the upside's limited and we start to correct in the stock market again, you'll probably see gold can start to receive more money again from that flight to safety bid. So there it is. Silver's going to follow. I'm going to show you the charts of the futures real quick because that's usually what I trade. GC, you had that uptrend line. Well, you had a lot going on there. That was the case for the short, the divergent high on the 60-minute here. We had negative divergence at the high. You had a very steep uptrend line that was broken. That was your sell signal, sent us down here. We took out that support and the trend line that sent us lower, but we held this one. And I mentioned, hey, I took a shot here at a long, but told you I could easily, be fine with it coming back. Even now, I'd be fine with it coming back even some more because we're well above the breakout on the triangle pattern. I think the correction's probably over. That's enough. And when it came down here, it put in a divergent low too. We had a positive divergence there. It's marked right there, and then we had it right there as well. So this was the divergent looked like this right there. Our divergence, there it is. So, and then we took out a downtrend line. We're moving around. I had this little trend line here. We popped that recently, back tested it, and boom, 1977 next resistance, and then about 2007 or so. And if we get anywhere near those previous highs, I think we'll just take them out and keep going because we already had the typical reaction on the first test to that 2020 high already. So we could continue to bounce off it if we get there, but I wouldn't try to game another pullback off it at this point in time. Again, I will see where we're at. Who knows if we even get up there anytime soon, but if we do, I'll let you know my thoughts. And on silver, gold's partner in crime, little brother, tries to keep up with it, usually does. Here's what it looks like. You got a trend line here. You had this bullish falling wedge pattern recently on the 60-minute chart, positive divergence that broke out, held this 2466-ish support. Recently took out 2567 resistance right there, which is good. That's bullish. So if any pullback to that level should provide an objective entry for active traders with a tight stop below if you want. I'd just like to see silver really stay above that 2465 support. It's a big level. We had a major reaction high. I didn't mean to do that circle there, the top one. Major reaction high right here, and then you had more recently some reactions there and some there, and that's it. So the fact that we broke this, we already back tested it once. We're coming up, another back test, another rejection. If we can regain that trend line, which I think will happen if we can pop 2638, boom, off to the races, and we get another run at the all-time highs or the multi-year highs, and then boom, hopefully go through there. Cannabis stocks doing okay today, but nothing big, nothing really new to report since the other day. They're all hanging in there and need a little more work. Oh, I grabbed a chart on another monitor I was looking at, so I was talking to you here. Anywho, see TLRI, for example, still testing that major downtrend line, needs to pop it and then run. And so as long as we have this dash for trash I talked about the other day with the meme stocks going up, who was it, AMC or GameStop the other day? AMC, boom, popped that resistance. I think it was GameStop. Yeah, that one, boom. I told you, if you wanted to, I said you can short it at 149. It was big resistance. It rallied right into, would have given you, until today's lows. That would have been a target to about 15%. You would have targeted right there. That's good resistance or support. It was former resistance. About a 15% quick pullback. So, when these lower quality tier stocks, they all stop going up when the market stops going up, or most likely shortly thereafter. RKDA, I already told you, just hit the should have hit my bottom target, which was the bottom of that target zone was 238, and the high of the day was 237. There you go. That's why I like to sell just shy of resistance. In case you missed the fill. And don't forget too, even if it hit 230, which it could still go up, but even if it hit 238 as the high of the day and you had a limit order to sell at 238, you may or may not get filled because you have a bid and an ask, and the bid price is what you pay when you buy a stock, or I'm sorry, the ask price is what you pay. That's the higher of the two. So you might see a high, and I've had people say, "Oh man, Randy, I had an order in at 238. Your stock hit 238, but why didn't it get filled?" Well, you had a sell order, and that's going to fill at the bid price. So that's another reason you want to adjust your orders down just ever so slightly below the actual resistance level in which you expect a reaction. All right, guys, I'm going to wrap it up here, get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.